All About Stocks this week. Markets in consolidation as investors book profits. Will tell you what your investment strategy should be. Chokkalingam is in the studio. He's made a profit of 60% in his portfolio. We'll tell you how he did it. Welcome to All About Stocks. This is a show for retail investors. So if you've been in the office all week, you've missed all the action in the market. On the next half hour, we're going to tell you how you can catch up, what you should do with your investment strategy, and what stocks you should be adding to your portfolio. So stay with us. Remember, if you have a question about your stocks, you can write to us. Our email ID is at the bottom of your screen, and you can reach me personally on Twitter. Well, if you want to know what happened in the markets this week, Ajay is here to give us an update on all of the action. Ajay.
Well, Faye, another fabulous week for Indian equities. We've gained about 2% on the benchmark indices. But the bigger story was the massive outperformance which was seen in the broader markets. In fact, the BSE mid-cap and small-cap indices both rose about 4% compared to, 1.5 to 2 of the benchmark indices, massively outperforming, clearly indicating that the dollops of liquidity which India is witnessing is actually going in broader markets. In fact, if you looked at the amount of block deals which were conducted by several funds in mid-cap companies is also an indication. Liquidity situation remains extremely benign for Indian equities. In fact, on several days we saw over 1,000 crore of buying coming in on select days. So liquidity is good from the FII side. DIIs are very selective as far as purchases are concerned, and it has been a mix of buy and sell, but FII continue to buy in Indian equities. Global cues are pretty supportive. In fact, traders say that the recent indications from ECB about a stimulus perhaps in October is also actually very positive for emerging market equities like, of course, India. For next week, traders believe that in the end of this particular week, small corrective move happened on the benchmark indices. It may continue because we are at elevated levels, record levels, about 29% gains on a YTD basis. And of course, traders will also eye the IIP and the CPI data next week, which may decide the direction of the market from here on. But buy on dips is what is being suggested by most traders on the street.
All right, Ajay, thank you so much for that update. Joining us today, Chokkalingam, founder of Economics Research and Advisory. Chokka, thank you so much for coming in. I want to ask you a very simple question. If we look at the journey that our market has had, now crossing 8,000 on the NIFTY. Now, people are talking about 8,200 before the end of the September series. It has been a very brisk upward trend. Do you think right now the markets are overvalued and we might see a correction around the corner?
In my view, the market is not overvalued, the whole market, because unlike 2008 when market peaked out at 21,000 Sensex, now we have 1 year forward P of less than 15 for the whole index. Whereas at that time we had exorbitant, premium to the rest of the world markets. So that kind of situation is not there. But however, I feel that there is a dichotomy. While on the one hand, the whole market there is some comfort, there are lots of mid-cap and small-cap stocks. They have gone up beyond any valuation comfort zone, and the bubble is being built up. So that is where the investors have to be very cautious.
So tell me this, how much of the money that's been flowing in off late is FII money? And we know that a fair amount of it is FII money. And we haven't had too much domestic participation. So are we still in one of those phases where if the FIIs or the foreign investors get spooked by something either global or domestic, that they will just take their money and leave and pull the carpet out from under our feet?
We need to worry only temporarily. There won't be any crisis, because my thesis for the last 5-6 years is that it is only the one-way traffic for the FIIs. They can only bring either 30 billion or 60 billion in a year. They can't take the money back. You just recall post-Lehman what happened. They tried to take back only $12 billion. The index crashed from 21,000 to 8,000. So today, if they have to take out even $5 to $10 billion, it's not possible. It will crash like anything. So there is no possibility for them to, they can take out money from the debt instrument, actually. That has become more volatile than the equity instrument for FIIs. So I don't see such a major crisis happening.
You did talk about the fact that you believe that there are a few mid-cap and small-cap stocks that are overvalued at this point. You in fact used the word bubble, which is a very sensitive word to use in our market. But tell us this, for those of us who have mid and small caps in our portfolios, should we be worrying about the quality of mid-caps we have? Or if we think that a particular stock has run up a fair amount, would you say that it's a time to consider exiting a few stocks?
Certainly. See, we have seen a lot of thematic bull run and then bust. We have seen aquaculture theme running, finance companies, cement companies, then IT bull run, then infra. Now, today it is sector agnostic, the bull run and the mid cap. From IT to pharma to infra to any name you mean, there is a huge rally, which proportionately increases the risk, because when they were trying to, take the money out today in this market where 2/3 of the mid cap stocks have participated, it's going to be very tough. So the crash can be much severe than the way, the journey towards peak. So therefore, investors should, look at shareholding pattern. There are some companies, promoter holding is in single digit, and the stocks are quoting even at 1,000 PE. I'm not joking. So they should look at the shareholding pattern. They should look at the leveraging. They should look at the business. And suddenly in June quarter or March quarter, if there is a super growth in profit, they should be suspicious about that. So these are the parameters they should look at, and then should they take money out. So should not hesitate.
If you were to look across our market right now at the various sectors that are available to us as investors, which sector do you believe still has some value left in it? Where if I got in at this point, within the medium term of the next 3 to 4 years, that there is still some value to be made. It hasn't run up as much as some of the other sectors we're looking at right now.
It is very difficult to say, like for instance, I am bullish on IT and pharma, defensive. Something goes wrong, with either interest rate cycle in US or in one shot, Fed removes entire $25 billion in October meeting, there could be some pressure. So therefore, IT pharma can do well. But then again, you have IT companies with a 300 crore turnover quoting at 15-20 PE.
Yes.
You have even Wipro, Infosys quoting at much cheaper. So one has to be very, very specific on individual stock rather than on a whole sector, becoming bullish. So I think one has to look at a very individual stock and then make money.
All right. So I normally ask you what we should be buying in this market, but because the Nifty is, at 8,100 at this point, I want to ask you what we should be selling. Of the big stocks that we've been talking about for a while, is there anything you think we should book profits on right now?
In the large cap?
Yes.
I am not worried about actually large cap.
Okay.
You look at, FMCG. Maybe Unilever is costly, but then there is a tactical opportunity if they delist, because globally all are, either 75% owned or 100% owned mostly. So, but otherwise there is a lot of comfort, most of the large cap stocks, even if they fall 20-30%, they can recover. Okay. So my concern is only on the mid cap, where you have, companies with a 200-300 crore turnover quoting at 30-40 PE. So it's very risky in small and mid cap.
All right, the other stock I want to ask you about is L&T. Big order we saw come in on Friday on L&T. And if you look at the one-year chart of that stock, it's up about 130% for a company of that size. Where do you see L&T going forward?
I think it, as stock per se, it is fairly valued. To pay more than 20 PE for a capital goods sector company in this country, where still industrial economy is growing at around 33%, is quite, costly, But however, I am very bullish on the structural bull run continuing for next 2 years. So therefore, if you have to be in the equity market, you have to have exposure to large cap, and therefore you have to have exposure to L&T. But I won't advise aggressive buy on it. Those who are holding it, they can hold. If somebody wants to enter, they should enter only if there is a correction in the stock.
All right. So this is the main advice we're taking away right now, is that if you have mid caps in your portfolio, it's a good time to take a look at them. Make sure that they're good, strong companies with strong balance sheets, or if they've run up a fair amount, then take some money out of those mid caps. And of course, we'll be giving you suggestions on what you could buy in this market a little later on the show. Let me answer a few questions. Aditya has written in, he has 400 shares of L&T Finance, which he bought at 76 rupees. Should he hold on to this stock or should he sell it? We just talked about L&T, but L&T Finance?
It's a great company, but temporarily they are going through some difficulties, and the stock has already crashed, from the peak. You should hold on to it.
All right, hold on to that stock. I want to take another question. Prathamesh has written in 100 shares of Tech Mahindra, which he bought at 1,800 rupees. He wants to know if he should hold on to that stock. Tech Mahindra, look at that stock go. It ended the week at 2,468, hitting a 52-week high on Friday. Now, Tech Mahindra has been a stock we've been talking about for a few years now. It has done so well. Would you recommend he holds on to it?
Certainly.
What can he hope for? Give him a target to look forward to.
So definitely minimum 2,600, but if he is willing to hold for more than 1-2 years, it should cross even 3,000. Because you look at a company like Sasken or, with a 350 crore turnover kind of multiple they enjoy. So a leader like Tech Mahindra should have better, multiple. So I would suggest that, one should hold on to all the quality IT companies, because there is a possibility of rupee coming under stress in the second half of current financial year. because India has to repay $174 billion of external debt by March 31st. And then close to $30 billion is there by FII in the debt instrument. So when the interest rate cycle is reversed in the US, there is a possibility of the debt money going out in a big way. So therefore, IT should do well in the second half. Hence, you should hold on to it.
All right, hold on to that stock. And of course, Chokka telling us that if you have the patience to hang on for at least 3 years or so, you can hope for above 3,000 from Tech Mahindra. Let's take a look at Chokka's own portfolio. It's currently at an overall gain of 60%. Remember, this portfolio was designed on the 8th of August last year. We've been tracking it ever since. And it's outperformed the NIFTY by about 14.5%. I'm going to give you a list of stocks in this portfolio. Right on top, we have ITC, Infosys, RIL, RCom, Avigni Lignite, J&K Bank, Emphasis, Karur Vaishya Bank, Bamho Lorry, that's up 82% since we bought it, Moil, MRF, and JK Tyres, that's up over 200%. Zenza Technologies brings up the end of that portfolio. Chokka, the portfolio is doing really well. I want to ask you about a couple of stocks. J&K Bank really hasn't turned around. Do you want to hold on to it? It's up about 10% since you bought it.
Yeah, we added very recently. This is a mix of a lot of stocks which entered recently, which entered some time back. I would suggest sell on the stock. It's a very passionate stock, but unfortunately, first time in the history, it got into difficulty with the NPA. You know, in June quarter, the NPA has gone up to 968 crore net NPA outstanding from mere 56 crore.
Right.
So in percentage terms, from 0.14% to 2.18%. So even September quarter, there can be trouble for the bank because now we have the Bhushan Steel episode that should play out for September quarter. So therefore, I would sell J&K Bank.
Well, the other one that obviously is causing me some concern here is RCom. It's down 20% in a portfolio that's doing so well. So it's obviously dragging down your portfolio a little bit. Do you want to make a change there? Is it time?
I made a mistake of, rarely I become a, tactical man. Basically, I love value stocks. So I made a mistake of adding a tactical idea. So in fact, I would sell this stock and go back to my only the value investing because, the portfolio has to be managed sometime intraday. So, so that's a limitation. So considering that, I thought now henceforth I would go 100% value stocks. Right. So that's why I'm replacing RCom with Bombay Burma and J&K Bank with the International Paper Corporation.
Okay, let's talk about Bombay Burma. In fact, I remember, we're going to pull this up on your screen a little while. Chokka recommended Bombay Burma when it was trading at about 115.
Yeah.
And it's currently at a little over 200. So while we're adding it to our portfolio right now, and for those of our viewers who are already holding it based on your recommendation, it's hit that target. What do you expect from that stock going forward?
Well, I mean, one should hold. In fact, I went wrong of, giving lower target price. Actually what happened, I interacted with a lot of specialists, in the Companies Act. Okay. I got overly bullish on the stock after talking to them in the sense, it is now confirmed that it's going to be very tough for any promoter to, hijack the investment division or investment companies of the, listed entities. Yes. So you need now the minority shareholders majority voting if what all the promoters are going to hijack any such a great investment. It happened in the past. There was a company which had a Bajaj Auto share at 5 rupee and they hived up into a separate company and then the promoters bought out. So I believe that that's not possible now. So therefore I have become more bullish. Secondly, in the last 1 month alone, the Britannia stock has run up substantially. So today the value of investments in Britannia, which is a subsidiary of Bombay Burma, is worth more than nearly about 7,500 crore. Whereas the market cap of Bombay Burma is around 1,300 crore. So there is about 82% discount to the investment value. And plus, it's not a shell company. So it has got plantations and a lot of real estate assets also, being a 100-year-old company. So I think, the way Britannia is now running up, costlier than ITC, my sense is whether there is any possibility of acquisition of Britannia by any MNC. So if that happens, it can be a multi-bagger. Very
quickly, tell me about International Paper Corp as well. Why are you adding it to your portfolio at this point?
Yeah. Valuation-wise, there is no comfort. If somebody merely looks at valuation, let them not touch the stock. It's a great stock. I like the stock. I don't own the stock. It's a part of 29 billion, MNC, and they bought out Andhra Paper and now renamed this International Paper Corporation. Now they bought out the company at 674. Now today the stock is 295. And when they bought out, the rupee was around 44, and today the rupee is around 60. So rupee is down 40%. The stock is down more than 50%. And IPC is a number one in the food packaging, and they are number one in North America in entire paper, number one in Russia, number 3 in China. So, if acquisition doesn't happen, at least there is the growth comfort is there. In next 3 years, it will be a fantastic company. I believe that in 3 years, it should double.
All right. So these are the ideas right now that you're getting. Bombay Burma, and we talked about International Paper Corp. And of course, when we come back from the break that we're going to go into now, Chokka will give us one more recommendation for this week. But what I'll do before we go into break, I'll give you a recap of the stocks as they stand in Chokka's portfolio. There's ITC, Infosys, RIL, Bombay Burma, Naivedli Lignite, International Paper Corp, Emphasis, Karur Vysya Bank, Palmer Lorry, Moil, MRF Tire, JK Tire and Sensar Technologies. If you have any questions about that portfolio, feel free to get in touch with us. Email ID is at the bottom of your screen. Coming back on the other side of this break, a new stock recommendation from Chokka. Don't go anywhere. Welcome back. You're watching All About Stocks on ET now. Thank you for staying with us. T. Chokkalingam is still with us, giving us help with our long-term strategies when it comes to buying stocks. Now, we asked Chokka to bring us one recommendation this week that makes sense for us to buy at this point that will be a multi-bagger in the days to come. Remember, you have to have a long-term horizon if you're going to take this advice. And he brings us RANE brake linings. That stock ended the week at 279. Now, for those of you who are not familiar with it, this company makes auto ancillary, and it has a technical collaboration with several Japanese companies, and it's making a lot of the brake linings, disc pads, clutch facings, things like that. Tell us why you think this makes sense at this point, why we should be adding it to our portfolios.
If you look at entire auto component, there are only 2-3 stocks which are available at attractive valuation. There are some auto companies available at even 25-35 PE. So this is very comfortable. They posted 22 rupees for FY14. I'm expecting around 35 rupee EPS for FY16. So forward PE is very comfortable. Secondly, it comes from a very good management, RANE Group. I consider them as a most ethical and investor-friendly management. And third, they have got a tie-up with Nishinbo of Japan, which has got 20% stake in the company. Now, a lot of things are happening between India and Japan, so politically and economically. So I firmly believe that the relations will get strengthened, and there will be a lot of money flowing into India. Possibly, Nishinbo can think of, increasing the association either in terms of financial or in terms of technology. Nishinbo is number 1 in the world. They attained this leadership position in friction material business. Okay. So all these comforts are there. Finally, recently the promoters management has announced, selling of land. They have got multiple plants. One plant is in Chennai. So earlier also they sold land and unlocked money and rewarded the investor. So all these comforting factors are there. Hence, I recommend the stock.
What is your target on this stock, and any disclaimer you'd like to give our audience?
It is 385 rupees a target price. I have been buying, even at this price I am buying for my clients. I do not want the stock directly or through any proxy or friends or relatives.
Rajendra has written in, he wants to know why the stock price of Sasun Pharma is increasing day by day. He says within the year it's given a return of more than 200%. He wants to know what the future prospects of this stock are. The stock ended the week at 212 rupees. He was trading around about 60 in September. Would you be able to explain to him why this stock is running up so much?
I have seen the stock for 20 years actually. Many times it surprised. Once it fell to 15 rupees and then went to 260. I have seen many cycles in the stock. So difficult to understand why it runs up like this once in 3-4 years. But definitely for any analyst it's a sell, because in FY14 they made losses. In even Q1 they made losses. I don't understand the kind of valuation that the stock enjoys. So there are many mid-cap, small-cap pharma companies are running like this. So I think you should be happy with the profit and you should take it out.
Okay. If he takes out the profit, what would you like him to do with that money?
As I mentioned earlier, International Paper Corporation
would be a good buy.
Because MNC stock, they remain costly. We get fooled, even after 3 years they remain costly, but the stock rewards you handsomely.
All right, so there you have it. It might make sense to take some money off the table and enjoy that profit when you have it. Let's take another question. Vijay Rao has written in, should I be investing in Lupin at the current levels? My investment horizon is for the long term. Lupin ended the week at 1328. I mean, this is one example. It might seem like an expensive stock. At the current levels for Lupin, do you think it makes sense to get in?
Yeah, if he's willing to hold for more than a year, he should buy it.
Okay.
As I said, there will be room for differences to play out in the second half of the current financial year. And secondly, again, compared to many small cap, mid cap pharma stocks, this is still available at comfortable valuation. So you should definitely hold on, buy the stock.
Tell me something. If he were willing to hold on to Lupin for at least 3 or 4 years, what can he expect from it?
It should outperform the index, definitely. Because 3-4 years, my view is that rupee is going to come under tremendous pressure. Okay. Import of oil bill used to be $12-15 billion. Today it is around $160 billion. So in the next 3-4 years, there will be tremendous pressure. All the pharma companies will do extremely well. quality companies in the next 3-4 years. So it should outperform the index, and at least 15 to 20% annualized return you can hope to get, unless there is something else happening to the whole country or markets.
All right, so if you can, it's a good time to be buying into Lupin there. And if you have any more questions about Lupin, feel free to write to us. Email ID is on your screen. Ajnesh has written in 2,000 shares of Pidilite, which he bought at 300 rupees, and 1,000 shares of Barmalori, which he bought at 525 rupees. He wants to know if you should hold on to that stock. Now, Barmalori has been one of your recommendations now for a really long time. What do you feel about the stock right now? And at 525, would you recommend he holds on to it?
It's close to 625, 595. It should hold on, definitely. You look at the Snowman Logistics, the kind of response and the kind of market expectation. Its a P will be almost 30 when it gets listed. Whereas this company is still around 10 P. It's a zero debt company, and a lot of cash on the books. The most important thing is that, in my view, this is the best logistic company in the country in terms of the logistic infrastructure assets. It's a mind-boggling. And even today, if you see the Barmalori company's website on the home page, it clearly mentioned that they have given an undertaking to RBI to divest the stake in Barmalori company and wind up the holding company.
Right.
I believe one day that will happen, because they have given an undertaking to RBI. When that happens, the stock can double, triple. If otherwise, it should give decent return.
Well, he also has Pidilite, which he bought at 300 rupees. What would you recommend he does with Pidilite? Pidilite
is too costlier than ITC, whereas focused on single product, unlike ITC, diversified product. So I would suggest sell and buy Bombay Burma. I firmly believe that in 6 months to 12 months, Bombay Burma would outperform Pidilite.
Let's take a look at one of our viewer portfolios. Now remember, every week we pick one lucky viewer and we take a look at your entire portfolio. This week, Kanwarjit Singh is our lucky viewer. He sent us a list of the stocks in his portfolio, 370 shares of RIL, and he got in at a good point, 725 rupees. Hold on to RIL, Chokka. What can he expect? We're talking now, of course, about the fact that we might have some information about gas pricing fairly soon. What are you expecting that to do for the stock?
I think it has to be revised upward, but even if something goes wrong with the gas prices, it is not up to the expectation. I'm not worried about RIL.
About the stock, okay.
Because the share of domestic gas business in the whole business profit is now coming down to a negligible level. So they would be able to manage. So he should hold on to the stock.
All right, and good news would be a good trigger anyways.
Definitely.
All right, ONGC, which he has at 408 rupees. What should he do? And he has 100 shares of ONGC. What should he do?
He can hold. The way the oil has crashed in the last 2 months by 15%, that should be positive for this company.
He also has 50 shares of Tata Motors, which he bought at 450. Now, Tata Motors obviously benefiting from the global business right now. What can he expect if he holds on to it going forward?
Around 560, doing well. It's still cheaper, in terms of valuation, so he should hold on to it.
All right, hold on to Tata Motors. NTPC bought at 80 rupees. What's your call?
I would sell, considering this coal black issue, and it is also associated with one of the big coal mines. So I won't take any risk, so I would suggest sell and buy Karur Vysya Bank.
He has 50 shares of HUL, which he bought at 572 rupees. So he's making a profit in HUL, but you did talk about the fact that there is a tactical opportunity within HUL right now. So for those of our viewers who are watching, does it make sense to buy because of that opportunity?
Certainly a sell if you go by the fundamental valuation. So therefore I won't suggest people to buy. Only those who can take little risk can buy, because it's a purely call on the potential,
the possibility of
increasing the stake to 75 or ultimate delisting, because globally, except in India, Pakistan, in all other major countries, the parent company has got either 75% or 100% mostly. So plus what money they brought in last time for open offer, still about 10,000 crore is left in the kitty, which was not subscribed. So therefore, I would suggest, otherwise I would not.
And what would you recommend Kanwarjit do, because he has made a decent profit?
He can hold. Since he is already holding, he can hold.
Okay.
For fresh investors, it won't be advisable to take the risk.
And finally, 100 shares of Tata Global Beverages, which he bought at 148 rupees. And so much being said about the potential of the stock. Do you believe it might be overvalued?
I would suggest sell, because hugely valued in terms of PE. I don't have comfort. So I would suggest a shift to Biocon.
Okay.
I think that can outperform Tata Global in the next 6 months itself.
Do you want to give us a target on Biocon?
560 rupees is the target.
All right, so that brings us to the end of the show. Remember, you can send in any questions you have about anything you heard on the show to the email ID at the bottom of your screen, especially if it's a question for Chokka. He'll come back and answer your questions for you. You'll find a copy of the show on our Facebook page, and you can reach me personally on Twitter. Thanks for watching.